So Andrea, there are several types of retirement plans that you can contribute to when you start working as an employee. Now, most people are familiar with a 401k because that is the plan of choice for most private companies. But if you work for a state or a local government or a non-profit organization, you might be offered a different type of defined contribution plan. And so in our short educational video series, we're going to be talking about the differences and similarities in defined contribution plans that I think you should be aware of. And today we're going to be covering a 401k versus a 457b. So if you have a 401k or a 457b, you're going to want to stay locked into this video today. Hi, my name is Carson Graves, President and CEO of the Retirement Education Center.
And my name is Andrea, Director of Operations at the Retirement Education Center. And the reason we've created these educational videos is to make the difficult and confusing retirement process simple.
Absolutely, Andrea, and we do this by utilizing a team of strategic partners ranging from certified financial analysts, certified financial planners, estate attorneys, insurance advisors, and other needed professionals to help us build a comprehensive and holistic retirement roadmap to let our clients know when, where, and how they can reach their retirement goals.
For specialized strategies on how to maximize your retirement income, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
So a 401k plan and a 457b plan are both tax advantage retirement vehicles that you may have when you're actually employed by an employer. Now, as we mentioned, a 401k plan is usually going to be offered by a private company, while a 457 plan is usually offered by a state, local government, or nonprofit organization. Now, both of these plans do offer some similarities, as we mentioned, but there are some key aspects of these plans that you must know about if you're going to be offered one or even both of these type of plans during your working years, and we're going to cover that in our short educational video today. But before we get into that, there are two rules about your retirement income that we always want to give you. And what are those two rules, Andrea?
Well, rule number one is to never run out of money, and rule number two is to never forget rule number one.
So let's go ahead and dive into the differences and the similarities between a 401k versus a 457b. So we want to go ahead and start talking about how a 401k may differ from a 457b. Now, usually, as we mentioned, if you work for a private company, you're probably going to be offered a 401k. And if you work for a local or state government or nonprofit organization, then you could possibly be offered a 457b. Now, if you work for a large government company, you could be offered both. But I think it's always good to just point out when you have these plans offered what some of the differences may be. So for 2021, we're going to look at how a 457 plan is going to differ from a 401k plan. So a 457 plan, as I mentioned, is another tax advantage retirement plan that's offered by a state, local government, or some nonprofit employers. So who may qualify for a 457b plan? If you're a firefighter, police officers, paramedics, nurses, physicians. If you're a public school teacher, we see a lot of this with school teachers. They have a 457b and, of course, a 403b, which we can talk about in another video. College professors a lot of times have 457b plans. Also, if you work for a state or local municipal organization, so you're a trash collector, sanitation, highway maintenance, those type of people are usually, because they're working for a government, a local government, those type of people are usually offered a 457b plan. So let's go ahead and talk about the similarities between these plans here. Well, you can max out the contribution limits on a 401k and a 457b plan for 2021 at $19,500. That's how much you can put maximum in those plans. If you're 50 and older, both plans allow you to have a catch-up contribution, so you can actually catch up with any of these plans with a $6,500 contribution for a total of $26,000 in 2021, but you have to be 50 and older to do that. So both of these plans can also offer you a Roth contribution as well. Now, we did another video where we talked about a traditional 401k versus a Roth 401k. You can contribute to both. And if your organization offered both plans, you can do that not only with a 401k, but with a 457B plan as well. And loans are allowed. You can still take loans from a 401k, and you're able to take a loan from a 457B. Now, understand that it may be a little bit more difficult to get hardship loans from a 457B. So you have to talk with your plan administrator to know exactly how to operate if you needed to borrow funds from a 457B. It's a little bit easier with a 401k. Each of these plans, when you leave your company, you can roll them over into an IRA or a Roth IRA. And they both still have the same stipulation that you do have to have funds come out of those plans at age 72. And here's some differences here, because they do have some major differences. So the annual contribution, as I mentioned, for both your employer and the employee for a 457 plan is $19,500. That is a max amount you can put in a 457 plan. So if you want to save more, you will have to go outside of that plan to save more dollars. But the maximum amount that you can put into a 401k plan in 2021, both you and your employer, is $58,000. It's a huge difference. Also, 457B plans will work with other plans to max out your contribution. So that's a really unique element there. So, for example, if you have a 457B plan and a 401k, here's what can happen in this situation here. So you can actually contribute to your 457B. If you're really trying to save and max out your retirement, you can contribute $19,500 to your 457B plan and also max out your 401k plan at $19,500 for a total of $39,000 for the year. And so you can't do this with a different type of plan. So you can't max out your 401k plan and a 403b plan of $19,500. You can only do this with a 457b and another plan, another tax advantage plan. So it's a really unique concept there. You can also withdraw funds from your 457b once you've left that company before the age of 59 and a half and not have a 10% penalty. That's a major difference right there. So you leave your company, you're 55 or you're 50 years old, and you left your company. Well, you don't have to wait till you're past age 59 and a half in order to take money out of a 457B like you would with other tax advantage retirement plans, such as a 401k. You have to wait till you're age 59 and a half, or you will be assessed a 10% penalty for taking money out of that early. Also, employer contributions to a 457B, if they do, usually an employer will not match a 457B, which is another difference. More times than not, you will have matching that's going to be allowed with the 401k, but usually a 457B will not have a match. But if they do, FICA taxes are actually going to be imposed on that 457B match. That's not the case when you're talking about a 401k. A 401k, the employer contributions is not subjected to the FICA taxes. One other major difference that I want to point out here is that when you're looking at a 457B, they do have this clause, a different type of catch-up clause here, to where you can actually contribute when you're 3 years prior to your retirement. You can actually contribute double to that plan. So you can actually contribute up to $39,000 3 years prior to your retirement. You can't do that in any other plan type. So you can really max out contributions when you're 3 years away from your retirement. So let's take a look at this very simple example. Let's say you plan to retire in 2022. And in 2020 and in 2021, you can actually put in max contributions each year of $39,000 into that 457B plan. So you cannot do that with a 401k. The only catch-up clause they allow you to do is if you're 50 and older, and you can put in an additional $6,500. So these are some of the similarities here and some of the differences. If you're offered these type of plans, it's always good to make sure you consult with a financial advisor or a tax advisor just to make sure that you understand your own personal situation. Also, if you're going to take out any money from these types of plans, always just check with your plan administrator to make sure you understand all the rules, and so you don't end up making a mistake. So it's really important. So I hope that this information was insightful in helping you understand the differences between a 401k and a 457b plan. Please remember that these videos are created for educational purposes only, and always consult with a financial or tax advisor before making any decision about your retirement situation. For more information on this topic and other topics that we've discussed in other videos, please feel free to reach out to our office and leave any questions or comments in the section below.
To learn more about our services and how we can help you to reach your retirement goals, please make sure to click on the link in the description below and sign up for our free Maximizing Your Retirement Income Masterclass. After this video, please check out our other videos that we've created that will give you tips on how to maximize your retirement. Also, if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers.